Welcome to the deep dive. We are jumping right into the market reports for December 1st, 2025.
And this is a big one. The whole market is holding its breath for one thing.
The Federal Reserve?
Exactly. They have an operational announcement about ending quantitative tightening QT. It's probably the biggest marginal catalyst for the market right now.
Okay, so let's set the scene before we get to that. What's the cost of money looking like? We're still in a high-rate world, right?
We are. The reality is funding costs are high. The U.S. 10-year Treasury is sticky, hovering around 4%, so 4.00 to 4.03%.
The 2-year, usually more sensitive to the Fed.
That's a bit lower, maybe 3.45 to 3.50. So the curve has narrowed, but, and this is key, it is not signaling a deep, classic recession-style inversion.
So the market's stuck in this sort of limbo.
That's the perfect word for it. It's oscillating between hope for rate cuts and the current reality of inflation and growth uncertainty.
Which brings us back to that giant lever, the end of QT. In simple terms, what does this announcement actually mean for liquidity?
It's all about whether the Fed stops pulling money out of the system. If they announce they're going to start reinvesting maturing bonds, even partially, it signals the liquidity drain is over.
The tap gets turned back on, or at least stops being turned off.
Precisely. It's a huge mechanical shift, and that's what everyone is trading on.
Okay, let's switch to market psychology because the data here shows a really fascinating disconnect.
It really does. If you look at the VIX index, the stock market's fear gauge, it's pretty calm. It's around 16 or 17.
So medium-low, no real panic in stocks.
Not at all. But then you look at crypto.
And it's a completely different story.
Night and day. The crypto fear and greed index is in fear, sometimes extreme fear. We're talking single digits.
Why the huge split? Why are stock traders so calm while crypto traders are panicking?
I think it comes down to leverage. The crypto market is just far more leveraged. The recent price drop triggered massive forced selling. We're talking hundreds of millions in liquidation.
A leveraged washout.
Exactly. That feeds on itself and drives the index into panic territory. Yeah. The traditional market is just more insulated from that kind of cascade unless the news is truly awful.
Got it. Okay, so let's put some numbers on that pain. How are the main assets looking? Start with the broad stock market.
Sure. VOO, the S&P 500 ETF, is sitting around $628. It's in a volatile upward trend, but it's really being propped up by a few mega-cap stocks.
And QQQM, our proxy for tech.
That's around $255. Still the engine, driven by AI and semiconductors, but also very volatile.
Okay, now for the main event, the crypto correction. How bad is it?
It is significant. Bitcoin BTC is trading in the $87,000 to $90,000 range.
Which is down how much from the peak?
It has pulled back more than 30% since its all-time high back in October.
Wow, over 30%. That's not just taking profits.
No, that's a structural de-risking event. And, of course, the others followed. Ethereum is down around $2,800 to $3,000. BNB is also in a clear correction.
So that explains the extreme fear. Let's touch on the riskiest assets of all the pre-stocks. What's happening with private companies like Anthropic and XAI?
This is the absolute frontier of risk. The heat around them is driven purely by, speculation and FOMO.
So what's driving Anthropic?
It's their ongoing financing rounds and the belief that they're a key competitor to OpenAI. Investors feel like they have to be in it, almost regardless of valuation.
And Musk's XAI?
That's all rumors. Rumors of huge financing, secondary market premiums. It's a story stock, basically.
And a word of warning here.
A huge one. There are some chain-based pre-stock products out there, say on Solana, and the liquidity and compliance risks are just extreme. You should allocate next to nothing to these. Be incredibly careful.
Okay, a crucial warning. So let's tie this all together. Given the high rates, the crypto washout, and this QT pivot point, what's the strategic takeaway?
The number one rule is position control. Liquidity is paramount. This is not, I repeat, not the time for high leverage.
And for someone who wants to stay invested in the big themes like AI?
Staggered buying is the way to go. Dollar cost average into things like QQQM or NVDA, and you must use stop losses. Valuations are just too sensitive to wait and hope.
What about for crypto? Is it time to buy the fear?
You can, but very selectively. For core assets like Bitcoin and Ether, maybe some cash buying or DCA during these big pullbacks. But again, strict stop-loss rules are non-negotiable.
So the one-sentence summary for December 1st?
I'd say it stands at the intersection of a policy pivot, the end of QT, and a market in fear. A positive Fed signal could boost risk appetite, but the damage in crypto means you have to be cautious no matter what.
So we're caught between hope for easier policy and the reality of a painful correction.
That's it, exactly. And as you process all this, here's a final thought to mull over. We mentioned the Bitcoin pullback. Well, at the same time, gold has been strong. So the Bitcoin to gold ratio has fallen sharply from its yearly high. The question to ask is this just temporary noise from liquidations, or does this shift between the digital risk asset and the traditional safe haven signal a more fundamental change in how the market is pricing fear for the long term?
A fascinating question. That's one we'll be tracking. Until next time, stay curious and stay cautious.